Good morning, dear students. Myself, Kunal Kiran from the Millennium School, Lucknow. Yesterday, we have discussed about the process of accounting, functions of accounting, as well as advantages of accounting. Today, I would like to discuss the limitations of accounting. When I when I think about limitation of accounting, these are the points what I am going to discuss should be kept in mind while using the accounting information for our decision making. It does not take as a drawback only. It should be whenever you use accounting information for decision making, you should keep in your mind these limitations of accounting. So, first limitation of accounting is omission of qualitative information. Accounting system do not record qualitative information. As we have seen while we are discussing the definition or meaning of accounting, that accounting records only quantitative information. It records only those business transactions which are having financial character and can be expressed in terms of money. Any business information or activity which have a qualitative character, they cannot be recorded in the books of accounting, because qualitative information cannot be expressed in terms of money. For example, cordial relationship of management and labor, reputation of business, change in management, etc. We can see that these example, suppose I am taking cordial management of labor relationship. Definitely, cordial relationship with the labor and management increase the business output. It has effect on the productivity of the business. But since we cannot express cordial relationship in terms of money, so we could not record it in the books of account. So, omission of qualitative information is a limitation of accounting. Second point of limitation is it is based on historical cost. This is limitation in the sense accounting is based on some principles. There is one principle of accounting is historical cost, which says that assets which are purchased by the firm every asset which is purchased by the firm should be recorded at its original cost, and it should be shown year after year in the balance sheet at its original cost, provided depreciation has been charged year after year. So, accounting records does not show the effect of change in price label. In other words, it does not reflect the inflation effect on the price of the goods. So this is another limitation. Third point of limitation is it is affected by the window dressing. Window dressing means manipulation. So accounting information is also affected by window dressing in the sense accountants can manipulate the accounting information for the self interest of the firm. So when the accounting records are window dressed, then definitely it will not reflect the true and fair information to the users of accounting. So this is the limitation of accounting. Now, fourth point of limitation is it is influenced by the personal judgment. Although accounting is based on principle, concepts and conventions. There are techniques to record the transaction, but still there are so much subjectivity where personal judgment of the accountant works. For example, suppose we a business has purchased an asset, and every year we have to charge depreciation. Depreciation is nothing but decrease in value of asset over the period of time. So depreciation can be calculated on the basis of actual useful life of an asset, but it is very difficult to ascertain actual useful life of an asset. It is generally an estimation. So accounting is also affected by the personal judgment of accountant. Next point of limitation is it is based on accounting concepts and conventions. Although accounting is based on accounting principles and conventions as well as some concepts, these concepts and principles are evolved to make accounting more homogeneous and comparable, but they have their own limitations. So while you are using accounting information for decision making, you should keep in your mind the limitation that it is based on accounting concepts and principles which are having their own limitations. And the last point of limitation is incomplete information. Accounting gives information about the profitability of the business and financial position at the end of the accounting year, but the business activity is in continuous process. We cannot calculate actual profit or loss or actual financial position of the business unless and until we stop business activity and then we calculate the profit or loss or show the financial position, but it is not possible. Business is an ongoing process. So whatever the information we are getting in the form of accounting information, we should while we are taking decision, we should keep in mind that the information we are getting has a had it's not 100% true. So this is all about limitation of accounting.